Hey guys, how's it going? Welcome to the midweek market update. Hope you're all having a decent week so far. So yeah, euro dollar been pretty slow to be honest. The first few days of the week, probably price was just kind of slowly waiting for CPI today, which we've seen a little bit of reaction from, but nothing too major. So yeah, main thesis that I'm running with at the moment for the higher time frames is that the weekly is still bullish, but because we're so near this weekly low now, that should be weak in theory because it failed to achieve anything. I am looking for price to sweep this low and then potentially seeing if there's some remaining demand within this weekly demand. Where we also have some daily demand as well to see if then that will be the sweep that we need to generate the liquidity to fuel that next move up to run the highs, or if potentially we are now rolling over and we are respecting the top of this range and we are going to start to switch bearish. But yeah, for now we're getting very, very close to this zone. We obviously tried to have that reaction from daily demand the other week, but we failed to follow through. We've now broken that low. We are now within this bearish daily range, and just looking to see how price is going to react once or even when we take this low, which I think we probably will shortly. And yeah, like I said, we have some of this remaining demand. Pretty strong daily demand zone, which may have some decent volume left within, as it was a really nice level that swept that liquidity and then fueled that large movement to the upside. But you know, this tap in here when it first came into the zone did generate this move here, so it will remain to be seen how much volume that is left within the zone to generate any significant sort of bullish level. Now we've come very, very close to sweeping this low today, but we didn't quite, so potentially we are now going to see that daily and 4 hour pullback just to generate that equal lows, get some nice early traders getting in long, to then sweep those sell stops before we see that movement there. So at the moment, yeah, just looking to see if we can get some short-term longs into around potentially the EQ, or we'll look for some levels in a bit when we drop down the time frames and then look for another level. And then as we break this low, we'll have to see if we can start to, we'll just see what kind of price action we get. But yeah, not seeing anything amazing just yet. 4 hour chart, yeah, not a lot has happened this week. We had that pause in price action at the start of the week, so essentially took the daily low, we paused around. So it's a bit, kind of debatable whether or not you call that swing high or not. It's not a massive high like we have here. That's arguably one leg down, but for me, it's a decent enough of a pause in price action. It's more than 1 or 2 candles, so I am pretty much looking at that as my high here. But I'm essentially treating it the way that I would treat this, this pullback here in price action. That once we do get a break above it, it's still significant. It still means that we can get some short-term bullish price action. Of course, that means you need to mark out your highs and lows like that, and then it would be a bit more granular. But in the back of my mind, I was kind of trying to talk about this, I think, on the weekend, where like if we get a bullish break like that and I call it the 4 hour switching bullish, I'm still aware that it's this is the big strong daily leg, and this bullish change in the 4 hour price action is not likely to going to last that long. And I've been waiting for that lower high, that larger daily lower high, to print in and remain that bearish overall structure. So yeah, try and I guess be consistent as always, the advice on anything like that in the way that you do things. And yeah, I like to be a little bit more granular just because I have more of that day trading approach anyway. So I am currently kind of viewing that as my 4 hour high, but I'm very aware in the back of my mind that even if we do break that and then we switch bullish on a 4 hour chart, it's probably just a daily pullback to then run that weekly low. So yeah, I wouldn't say anything majorly right or wrong. If you don't want to classify that as your high and you want to count it up here, that's fine as well, and you can just view this as a minor break of structure, so on and so forth. That's pretty much what I've got to kind of talk about in the higher time frames. Obviously just filling the remaining little bit of orders that's left within the extreme of that move down here. And yeah, I will just be monitoring to see whether or not we are going to reject this 4 hour supply zone here and then roll over to then take out those lows, and then we'll have to reassess if we're going to get that sweep up towards the highs, or potentially if we're now playing within this daily range, I'm going to get a bit more of a significant pullback towards the EQ. So a couple of areas that I would be keeping an eye out on is, I'll tell you what, we'll do this at the end when we do the forecast. Let's dive into a bit more of the price action that we've had this week, and then we'll kind of end it with the forecast. It's a little bit more fresh in the forefront of our minds. So yeah, 15-minute chart, we then broke the low. I believe this was market open on the weekend, so we then switched bearish. Now again, this is going to depend on how kind of granular you want to define your swings in price, because you could easily argue that that's one bearish 15-minute leg and then that's the pullback. This is another leg here, that's a pullback, and then we broke it, and then we switched bullish. That's absolutely fine as well. Again, I'm a little bit more granular, so because we kind of had a decent enough pullback, we ranged for a fair amount of hours before we broke the low. That then became my swing high there. Just get rid of that line. So on Monday, we ended up having some nice equals form during Asia, and then we literally swept those around sort of Frankfurt London Open, had a bit of a short play within there, and then we rejected this sell to buy range. So if you had had it refined to that 15-minute candle, you would have just missed that move there. So yeah, I am getting a little bit, well, I'm becoming a bit more of a fan of using the ranges now, especially when you're talking about a pip or two difference if you were to refine it to that candle there. Especially because we're using confirmation entries, right, rather than the actual pure risk entry from that zone. And then likewise, you can see here, if you had it refined to just that inside bar, you would have missed that, or you would have been waiting for more. Well, you would have been waiting for price to hit it before they can hit the short, right? Whereas if you take the whole buy to sell range, then you can see what price is reacting to. So yeah, it's kind of the way I'm slightly evolving in my trading at the moment, is to kind of count more of the range, especially with those 15 minutes, because essentially I'm just waiting for price to get into there and then start to look for the 1 minute or below to start getting that shift in order flow. Yeah, so we pretty much had that run on liquidity, didn't really follow through, kind of chopped around for most of London, and then when we came into New York, we then swept those larger sort of equal highs and then tapped into that buy to sell range. Now technically that was my swing high, at least the way I marked it, so we did actually get a bearish closure there, but then you have to ask yourself what happens after the break, because there was pretty much no follow through. It retraced straight away, right? And then as it retraced, what did we get? We got that change of character, we spiked to the low, we mitigated this inside bar, so we filled the orders there, and then we came up and then rejected this area of supply. So then when we came down, there was nothing left to stop price until we took out these lows and came further into this range here, which we saw a bit of a reaction, but no follow through, and then we pushed down. So then as soon as we broke that low, right, the reaction failed. Price then spiked to the low, came back up into the supply. That caused this to fail, right, caused the reaction to fail, and then we continued that overall bearish trend. So yeah, the price action on Monday, it hasn't been great this week, really. I mean, the trades that we're going to go through, they're the trades that are there. But I would really kind of say this is the type of week where you could easily have just sat on your hands, right? You could have gone, okay, we've broken that daily low, right, that major 4-hour low. I'm just going to wait until we get a very clean, very obvious and clean change in bullish order flow, at least in the 15 minutes. Like I want to see some aggression and intent come in, i.e. kind of what we're getting now with after that volume from CPI, rather than kind of these kind of arguable swing highs, the kind of more minor highs, right? We're barely breaking them, and then we're retracing straight away, and we are continuing to fall short. And yes, you can, from a more day trading perspective, just keep following that 15-minute structure and take those trades, and you can clearly see, there's enough pips there to take advantage of. But if you just want to take a bit more of a hands-off approach, or maybe look at some other pairs whilst prices like this, until we see that significant volume and aggression coming in on the 15-minute chart, then you may want to start to play that sort of more higher time frame pullback, especially when there wasn't, I would say, anything super clear in terms of demand on the higher time frames. Like there wasn't, like, we didn't have a nice clean 4-hour zone like we did here. So arguably it's easier to just wait for that 15-minute to start to switch. Now you can see with that 4-hour candle, boom, now buyers are actually stepping in, and now it's a lot more safer to kind of start looking for those longs. And obviously, like I said, the shorts were still in play because we're still bearish, but how great or ideal is it to keep shorting after we've just had a major break in structure? And we're still within weekly demand, we're still approaching that daily demand zone. There's obviously going to be extreme demand within that leg. So yeah, shorts weren't ideal, longs weren't ideal either. But anyway, let's dive into the trades. They're just, it's not the greatest price action in the world, and that's why, yes, when we did break this high here in the 15-minute chart with the New York Open there, technically, if that is your swing high, we did switch bullish, but you have to then ask yourself, we've rejected supply. There's no follow through. We've retraced straight away. We've got that change of character. Shorts can be in play there as well. So yeah, let's take a look at Monday's price action, and then we'll come back to the 15-minute chart. So on the 1M and 1. So yeah, so that was the equals that we had, right? That was the swing high, and then we kind of swept those, but we didn't get a closure until New York over here. So let's take a look at the London session. So we got that sweep of liquidity. Just zoom in. So this was kind of the first trading opportunity where we pushed down into demand, right? We pushed up, we failed to create a higher high. So that's the start of our reaction, and we push below the reaction, and then you can set your sell order anywhere within this range. Price then eventually comes up to tag you in and straight out. So if you were to take a trade here, is it valid? Well, again, it's going to depend on what your trade plan says, but yeah, kind of for the way I would trade, that definitely is a valid setup. But you have to ask ourselves, why did it push up higher? And this is can be the difference between where you draw your demand and supply zones, because if you do draw it on the one candle, then yes, that would be the valid area where the flip occurred. But if you take the whole range, right, the whole sell to buy range, then as soon as price comes into it, where does price react? Comes in, and then it reacts here with that wick, right? So that's the push up, and then the push down on the lower time frames. So actually, if you take the whole range, that is where the flip occurred, and there would be a 30 or 15 second zone there, and boom, that's obviously the best entry, with the benefit of hindsight too, where pricing comes up to the extreme and mitigates that level. So if you did take a loss there, not the end of the world, obviously not the best area to be trading on the higher time frames, but yeah, from a lower time frame perspective, and purely looking at the price action, I think that's a valid play, but you can see the logic behind why price came up higher. And then we saw that move push down and sweep that low there. Now at this point, if I just look, so this point here, why price then pushed back up again is because we had this, just draw it on, M15 demand zone here, right? So then we drag that across, fills up the EQ of that, right? That zone there. So we sweep liquidity, we fill that zone. So you could have taken a cheeky hedge trade long within here if you fancied it. So we have some supply, right? Price comes into the supply, it reacts. Actually, I feel like they changed the data sometimes afterwards. I'm pretty sure that didn't take out the low at the time. Maybe it did. But anyway, there was a sort of a trade there, not the most valid because technically that did spike the low and form a lower low, but then you get the closure above and you could have taken that. But yeah, anyway, going to ignore that because it's not the greatest of trades, but then we get the movement back up. Now, as price is coming nice and correctively back up towards that area of supply, that's obviously what we want to see, right? It's increasing the probability, but what you have to also say to yourself is, if we are going to continue to see this bearish order flow, right, price has come up as high as it can from here and it's mitigated the extreme. So there shouldn't really be anything in here that price is going to want to come, because this is the first bit of where that interaction between buyers and sellers occurred. So arguably price shouldn't come up higher than this high. So this zone should be our extreme. So let's see price come back into there and see that switch in order flow. So then you see price come down into our demand range. It tries to make a higher high. That's the base of our reaction. As soon as we get that closure there below, you can then sell anywhere from within this range that I've marked out, and you would do a nice pullback in and gone. So that was kind of the tidiest way, in my opinion, of trading that move there. Arguably, if you had the zone refined to just this candle, and how you may have viewed it, just to clear this up a little bit, is you can see the lower time frame reaction, right? Prices come in, it's reacted, and then it's closed below the reaction. Not the cleanest, but somewhere within there, right? It's going to be where the reaction failed, and then that would be your pullback into the supply, and then you'd be off. And then that's when we came down to, so you could have got about just over 6R there, as we then came down into the buy to sell range. And this is where I was saying, if you had it, refined to that buy to sell candle, then you would have just, not missed that. And I think for the sake of a pip or two, if you're kind of looking for that accuracy with your day trading, I think using the range can be pretty useful there, to take some profits or potentially look for a hedge. But it didn't really give an entry there, in my opinion. And arguably price comes back down, there is a flip within here, but look at this now, price is just chopped in the middle of the range. This is not the type of price action you want to get involved in. You want to set your alerts at the highs and the lows and wait for a sweep to occur and then reassess, which is then what we get coming into New York. Generate some nice equals just during the crossover before New York opens. Then we push up through. Now this is where it gets a little bit tricky, right? Because we do technically switch bullish if you count that as your swing high, but then we come into the buy to sell range. And then we aggressively, and this is another thing you have to use in your analysis, right, is look at the intention of price, like the impulsiveness and the correctiveness. It comes into there and then it absolutely dumps kind of compared to the prior price action. Now what's really key here as well is this dotted blue line I've marked out is that 15-minute change of character, right? Because it's the first time we then get that lower low, right? High, 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 low, high, high, and then we spike down, showing us that first sort of lower low, showing us that in here demand has failed, potentially sellers are stepping in. So then when you get that failure, then what happens is you can essentially, depending on how you want to do it, either take the whole range, right? Anywhere there is your supply then range, because that's the buy to sell that caused that change of character, or you can even refine to, that candle there. All right, so now what you're saying to yourself is when price is down here, right? You could be looking at, potentially, let's say you had demand here, right? And then you see that as the flip, and then you push down, and then potentially you could have got taken that entry short there, right? But I think if you're going to take an entry like that, you may want to just manage this a lot more aggressively, and as soon as we break that low, just move to break even. And the reason why I say that is because look where you're shorting. You're shorting like right at the bottom of the leg, right? And it's likely price is going to want to come back up and mitigate. And especially then when you look at this whole, M15 supply zone that essentially has now been created. You essentially just want to wait for price to pull back into it, ideally back above the EQ of this leg here, which has now happened, and then just wait again for that shift in order flow, whether on the M1 or the lower time frames. But the M1 gave a very, very tidy entry. So obviously we come back up, we pull back, we create demand, we push up, we come. So if you mark the whole range right, or whether you just mark the candle, both would have given you the same end result. The price comes in, it reacts, and then it pushes down. So it is an inside bar, so it's more of a lower time frame range, but as soon as you get that closure below, right, and that's why I've got the risk reward tool here, because you could have got tagged in straight away there, but it does come back and give you another opportunity, and 2 pips should have been more than safe. So obviously you don't want to move to break even really until that swing low is broken, or using the more sort of a partial technique of waiting for your price to run about 4 or 5R, which would have been well below that low there. As well as something I forgot to mention, like when price did come back, like whether you're waiting for just to see that flip occur and wait for it to switch bearish, you can also see there was a very clean M5 doji there, which price then reacted to off the distal. So yeah, a decent amount of confluence, which essentially was that buy to sell range, which is that M5 doji there. Yeah, and then nice first targets like this inside bar. It was already mitigated. You can see with the spike when that change of character occurred. So arguably, when you're in the trade and you're looking for targets, you're looking for that sort of next M15 area of confluence for buyers to step in. This technically should now be mitigated, so price should be able to go through and take out this low, and potentially then you can look at this refined candle here, which is then where we did get a reaction. But yeah, end up just having a failed reaction with the flip, and then continuing to break low and form a new swing low on the M15, and then that's when it continued to be bearish down through Asia. So going into Tuesday, this is all of Asia's price action. You can kind of see how I've defined the swings here. We had a little bit of a pullback, but it's kind of just like a 3 pip range. So for me, that's still the high and that's the low. We pulled back, we failed to close below the low, so then we had that change of character on Monday, but then we broke that low again and came back down, but we came back into sort of more the extreme. So potentially this was, so what I'm saying here is that's a bullish change of character, right? We break the minor high, we get another one which is decent, but then we break this low again, which would be a bearish change of character, and that's kind of why those change of characters can get a little bit messy if you're just looking at these little minor breaks. But we come into this area of demand, so potentially that could be a good area to look for that long, to potentially try and switch bullish to try and get the initiation of that 4-hour pullback, or at least up into the premium of this M15 range here, where then you can then look for the shorts to then get that next leg down. So let's have to take a look and see what we got. So price came into it, right, spiked these equal lows and came into that extreme pretty nicely. And then if we look at the actual M1 price action to try and catch this long from down here, there was no pullback for that first one. So the first flip here is beautiful, right? Pull back in, push down, and the push up. So the only way you could have really got into that initially was if you kind of just entered that market or used a buy stop. But I would have been looking for the pullback, never would have got an entry. And then we did react to the next one higher up. So reaction, push up, pull back in, then you'd be in long, and then you're off. This one's not the greatest trades in the world. I have seen these work out plenty of times, and then because you are kind of still sort of getting in at the start of the move, if the M15 did take off from here, you would be reasonably well priced. But just purely from an M1 perspective, if you look at the prior leg, you're kind of entering almost in the premium there, right? So it's not ideal, especially when you've got an unmitigated, pretty clean flip just below. So if you got in long here, you probably want to be a little bit more aggressive in your management, kind of especially when we take that high, and as it ends up coming back down for a break even. But then it comes down here and mitigates that original zone that you were looking at, and then potentially there's another entry here if you wanted to take it. But this kind of just falls into what I was saying about just overall the price action not being great this week, not in the greatest of areas, and just waiting for that swing high to be taken first and waiting for something a little bit cleaner rather than this kind of choppy sideways price action. But yeah, if you did like it and you kind of were getting quite aggressive with your entries, we come back down to that original flip zone that you were looking at, so you likely would have cancelled your order at that point. So then just use a confirmation entry within here, wait for the price action to switch bullish again, look for that flip, and what do we have? We have this supply zone. So price comes into it, it reacts, it fails to break this low, it fails to put in a lower low, right? So then we break up above the reaction point, and then that would be, essentially your demand level here, and then you pull back straight back into it, and then that would be your long entry, but then that would have been a quick loss. And this is kind of what I mean, where, at that point, I think it's a pretty poor trade, because if you look at the M15, what's happened, it's tried to form a high, it's wicked it, it's failed to close, it's retraced back down. We've also then essentially rejected the premium prices within this range, right? That's the range. This would be the EQ, kind of rigged that, we failed, and we're retracing straight away, and now you're kind of just getting lost in the sauce in the middle, and I just don't think it's the best area to be doing that at all. And then then we continue down bearish, and we essentially have a bit of an M15 flip. It's not the cleanest, but if you view that wick as demand, and then you have the reaction, and then that's where the supply comes in to actually break the low. So those buy to sell wicks are a pretty decent area to be looking at. So then during the New York, or sort of end of London into, actually still London session, we came up into the extreme, right? Because everything's sort of been mitigated at this point. We've had the EQ of that buy to sell mitigated. We've pushed down, we've mitigated the extreme. So now we are playing within this range here, right? This is kind of the extreme wick. Price comes into it. This is kind of the last point, especially with the M15 flip there to hold. So this is a good area to look for those shorts if you're still kind of in the mood to be aggressive and continue to push a short until we kind of see bullish price action. Then there is an aggressive entry up here, which you can see on the M1, but essentially it's a lot cleaner on the M15, but you can imagine it. So we get the pullback, we get the push up, so that inside bar creates demand. All right, price reacts, fails to form a high, and then the reaction fails. So then we get the closure below the reaction, right, below this level here, and then you would have got tagged in on that wick short there. So that would have been a beautiful trade, a lot clearer in the 15 seconds, but then there's another M1 entry here where we have the demand, price comes in, it wicks it, right, creates that inside bar, then the reaction fails, and then we come back into it, and then we go. So yeah, not the most well-priced one. Definitely would rather be getting in here on the 15 seconds. In fact, let's have a quick look, see how that looked. Yeah, you can see that's a lot clearer. So high, pulls down into demand, down into here, fails to put the high, breaks down, back into that buy to sell range, and then off we go. But yeah, just from a high time frame perspective, not the greatest area to trade, but good for those cheeky sort of 5R trades in and out. And then yeah, it's just kind of, for us in New York, I didn't even really look at price action, because I'm just waiting at this point for something like this essentially to happen, wait for much cleaner price action. So then we were stuck within, or at least how I defined it, this bearish range here, right? Now you could have looked for shorts within the top of the range potentially here this morning, but I don't believe it gave an entry. Let's get rid of this circle, let's see. Yeah, it was during Asian session anyway. There's a bit of a flip within here, right? We react, push down, come back into it here, so that would have been your flip entry, but yeah, that was at 4 AM, and then we sold off. So then we took the low just around London, so then this became the swing high, and then let's see, yeah, we just chopped around basically. That's why I was not looking really at any of this until we got that CPI move, but I'm not actively trading anyway still, as you guys know. But yeah, let's see how you could have potentially caught that low before the push up. So if you were feeling aggressive, as soon as we got the M15 boss, we are falling very, very correctively. You could have looked for the longs, so that would be your last area of supply. Price comes into your supply, it reacts, and it pushes up. So that would be, somewhere within here would be your demand. So then price comes in, and then it would have ended up being a loser. But then we just generate liquidity, so now it's a lot more higher probability, as we know. And price pulls back up into your last area of supply, right? Pushes up, it reacts, the reaction fails, and then that would be your first flip entry there. So that'd be the first one, but again, it's still pretty aggressive because the M15 is still bearish. Now, there was an entry shortly after this that, in my opinion, it's a subtle difference, but it has much higher probability, because when we, so the flip I just looked at was this flip here, right? So this is our supply, push in, reaction, fail, all right, back into demand. But the move that generates, where we get this movement up here, what that actually does is it gives you a M15 change of character, but it's quite subtle, so you kind of have to be kind of on the ball for this. So I'll mark it out, is when we've broken the low, right, at this point we're still bearish. So when we have this movement up here, and that first loss we looked at, right here, there still hasn't been an M15 change of character. But then what we do is we essentially have created that pullback, and what that has done is created an M15 minor low there. So then when we take that low, right, and we've created this inside bar, that then can become your minor high. So then when we spike that high here on the 830 candle, that then gives us our bullish change of character. So you would have initially taken that loss there if you had taken that when there's been no change of character. We then get a sweep of liquidity, which now gives you a bit more confluence. So then if you took this flip here, right, that's probably why this trade then works out, or it's a better trade to take, right? And then you would have been in a nice trade, and that one, you would have caught the low, so you would have been in an absolutely beautiful position if you were in that or still in that. But then this one here, you get even more confirmation because the move that is generated from that second flip then gives us our change of character when it takes out that high. Okay, boom, now the M15 showing a bit more intent. So let's look at where the next lowest flip is. Well, this one's been mitigated that we just looked at. But if you refine that supply to the candle, where's the movement in, the reaction, this is the where the reaction fails, that's where the demand steps in. So whether you want to take the inside bar down to the wick, or then even, it doesn't come that low, so it would have had to be down to the inside bar. All right, and then that would have been your entry there, or you could have even traded the reaction and we get some nice bullish order flow. So yeah, that for me was probably the safest entry, just waiting for that M15 change of character, and then he was just chopped around really until CPI came in. And yeah, there's a few kind of cheeky little shorts in here. Let's have a look. Kind of, get those breaks of structure. If you're looking to play this, this is a kind of aggressive trading, but you can just see the price action there again, right? Nice corrective move into that supply zone. Right, higher high into demand. Let me zoom right in so we can actually see this. These are not super high probability trades, by the way. It's more just kind of a study of price action for educational purposes, but at the end of the day, the trades are there if you want to take them. So big supply zone, right? Pretty strong push down, reasonably corrective move back into it. We have the pullback, the push up, the pull into demand, the reaction, and then the failure. So that's where the supply came in with those wicks, those buy to sell wicks, and then boom, yeah, there's a pretty damn tight entry that you can get there. 2 pip stop, let's not be stupid, and then yeah, the 7R there or whatever. So a little bit of a trade there, but obviously more interested in the longs now, because what have we had? We've had, for me at least, a much more significant, like if you compare this to previous price action, right, kind of really correctively breaking these minor highs, retrace it straight away. Now we've had a clear take of the low, a clear take of the high. For me, M15 is clearly switched bullish. You can see the size of the 4-hour candle there. So yeah, now just looking for longs to take this a little bit higher. But the only bit where this gets a little bit tricky is how you define your 4-hour. So this is, for me, undeniably 4-hour supply. Just draw that across. It's a decent enough of a breaker structure there. You may not define it as your swing structure, but if you do, then we are already almost in premium prices, and you could look for shorts from here. So I would cautiously be looking for shorts from here to then try and target, I guess, the sweep of this bigger, larger double bottom. But I'd be very aware that this is the daily leg, and we could just as easily, break this 4-hour high, and then I'd be looking for that pullback into the longs to then play this up and towards the daily EQ, right? And then I'd start looking at these sort of supply zones up here to then look for the daily to form that lower high, and then look to run the lows. So it's kind of one of those cases where shorts from here aren't bad, but they're not amazing if you're looking at the daily time frame and whatnot. So I would keep an eye out for shorts from here, but just be, bear in the back of your mind that we could get that 4-hour sort of change of character, that breaker structure, and then look to play that back up into the EQ before then looking for that larger sell-off there. So that would be kind of the first 4-hour level I'd look at. I'd also keep an eye out on, if this was kind of that last real clean area of 4-hour demand. Then you have, you can see it in the 4-hour chart. It's more of a 15 zone, but it's there nonetheless. You've got that flip there, and then you've got this one here as well. So I'd probably keep an eye on those 2 areas from a 4-hour perspective at least. Yeah, obviously price coming down into this doji as well. I don't know if price will come that deep. And then M15. Let's see. That's where the flip occurred. Yeah, so you have that area of supply, price reacted in and gone, and that's also what caused the break of structure. So I'm not a big fan of it because it's quite a clean push, but I would keep an eye out on that. But I think what may be more likely to happen is that we'll sweep these lows as liquidity, right? Potentially come in and then look for that change of character, and then start to look for longs to then run those highs. But obviously it would be nice if you come down lower into some of these levels as well, sort of anywhere down and with around here, and then just looking for that bullish order flow to start kicking in. And then yeah, just keep an eye on, I think we've already spiked up through that. Yep, so that's gone now. This would be my next M15 zone nested within the 4-hour, so that'd be a pretty decent level as well. If I can actually get it on the candle, there we go. Yeah, so this is kind of the first line of defense really for the more recent bearish order flow to kick in. But I wouldn't be surprised if we kind of take this minor high and we start to have a bit more of that deeper pullback to get that daily pullback up into around these sort of regions, potentially even all the way up to the extreme, before we potentially try and take out this weekly low, as we have failed to do so currently. So definitely be looking for longs to push it up into 4-hour supply, then look for shorts as well. But yeah, with the potential, if you're on any longs, you may want to hold a little bit of volume to see if we can push that up, yeah, a bit higher. And then obviously just keep your eye on any of those old M15 zones. So yeah, that wraps up. I hope you guys have a good end to the week, and I will chat to you guys on the weekend. Cheers, guys.